Ajit Kumar is Lead BFSI Research Analyst at JM Financial Institutional Securities is with us. Ajit, good to have you with us here. Thank you for your time. So across the board, I think as Gaurav comprehensively outlined, there is decline in margins, which is expected, some bump up in credit costs, etc. as well. How do you approach this season? It's going to be, of course, when we know, we'll know, but these are largely modeled in since NIMs will be lower because of course, rate cuts, etc. What's your sense?
Yeah. No, good morning, everyone. I think, Gaurav has summarized this, beautifully. Gaurav is absolutely right. We have the latest credit growth data till 27th of June, 2025. Now, the interesting point is YTD credit growth is roughly 1.3% versus, let's say, 2.8% last year. So credit growth definitely is lower as compared to last year. And on top of that, there is a margin compression which is going to happen across the board. Let's say, for the large banks, we are expecting roughly 10 to 20 basis point of margin decline in 1Q. Even in second quarter, there should be at least 10 to 15 basis point of margin decline in second quarter before recovering, let's say, by fourth quarter of this financial year. So net, because of this moderating loan growth and let's say margin compression, NII growth for our coverage banks, it's not more than 2 to 3% on a YOY basis. And 1Q is normally seasonally weaker quarter. But even if we adjust for the seasonality, my sense is 1Q is going to be even more weaker quarter for the most of the financials name. On the asset quality side, yes, slippages are going to bump up because in the large bank, there is elevated agri slippages that come in first quarter. And on top of that, you have unsecured loan, which is a bit of pain still now. So net, your credit cost is going to be higher. So combining for all the banks that we cover, the PAT growth is going to moderate to roughly 8 to 9%. Versus, let's say, 6% decline that we had seen in fourth quarter. So this quarter as well, we are going to see, PAT declining by roughly 8% on a YOY basis in 1Q26.
All right, well, that's just hold on to that thought. Ajit, we have a newly listed company, Travel Food Services. It lists at a bit of a premium in comparison to what the IPO price is. And there's quite some ringing going on there with regard to that bell. So, management sounded optimistic about growth, profitability, and ROCE of, I think, 50% is what they were mentioning as well. The hugs are there, a green listing out there. I think the grey market premium had come down a little bit, but the stock opens up in the green. So I think, those smiles are quite bright and proud out there.
Yeah, I think
and the ring was quite something.
Yeah, I'm sure there'll be some good food as well at that listing ceremony.
Better be.
Well, that's Travel Food Services. They offer, of course, food and beverage services at many, many airports. Big
All
airports.
the youngsters as well, quite happy to be part of that.
Yeah, it's one big happy family there at TFS as the company makes its listed market, public market debut today. We'll keep an eye out on how that share behaves as the day progresses. But just to get back to that conversation on financials with Ajit. Ajit, so, okay, let's just break it down in terms of, first of all, from an investor's perspective, should we be, when we're watching out for the biggest delta, should we be looking at the biggest growth outliers? And in which case, which could those banks be? I think the consensus is tier 2 banks will probably be tier 1 banks when it comes to growth. And when it comes to the margin delta, perhaps the best margin performance, the least drop in margins, etc., then which could be 2 or 3 of the banks which could surprise on the margin front? So tell us both.
Yeah. No, I think on the growth side, some of the smaller banks have done relatively well. Like, for example, AU Small Finance Bank, they have reported, good set of numbers, especially on the growth side. My sense is PSU banks, YOY growth is going to be higher as compared to private sector banks. And this has played out in last quarter as well. Even in this quarter, the banks who have reported their numbers till now. For PSU banks, YOY growth is roughly 11% versus, let's say, 6 to 7% growth for the private sector banks. So PSU banks are growing faster as compared to private sector bank on a YOY basis. And then even on, let's say, some of the smaller bank side, let's say, for example, AU Small Finance Bank, Karur Vysya banks, those guys are delivering, better on the growth side. Now, on the margin side, my sense is some of the mid-sized bank like City Union Bank, where most of the loans are fixed rate in nature, their, margin decline is going to be lower. Then some of the large banks, margin decline is going to be somewhere in the range of 10 to 15 basis point. But for the other banks, right, like, for example, all the other mid-tier banks and small finance bank, our sense is margin decline is going to be even more sharper. It's going to be somewhere in the range of 30 to 40 basis point. And the reason for this is there are two drivers of actually, this margin decline. One, obviously, the, policy rate cut that has happened, let's say in last, 2 to 3 months. The second issue here is mainly because of this stress in unsecured loan. Most of these mid-sized banks and NBFCs are getting into secured loan all at the same time. So everybody wants to get into vehicle financing. Everybody wants to do affordable financing. So what is happening is there is a loan mix shift which is happening from unsecured to secured, and that is putting pressure on the yield side. So there is a mix shift which is happening from unsecured to secured, and as a result of that, there is elevated competition in the secured loan. So there is a pricing pressure as well in some of the secured segment. So yield is coming under pressure, and that is why we believe that for mid banks and NBFC, the margin outlook is even more muted. But coming to your question on the margin side, our sense is City Union Bank and large banks are going to surprise positively, or at least their numbers are actually baked into the expectation.
Okay, and very quickly your top picks then, just quick 30 seconds.
Yeah. So ICICI Bank continue to remain our top pick. ICICI Bank, SBI, even Axis Bank remains our top pick. In mid banks, City Union Bank and DCB continue to remain our top pick. In NBFCs, we like, Bajaj Finance and PNB Housing Finance.
Okay. All right, Ajit, thanks a lot for joining in and giving us that view. We look forward to chatting up with you as the numbers keep trickling in. For the time being, let's get back to the market.